But among those that are less confident, if you like that segue, are consumers, because consumer confidence is wavering amid economic uncertainty. This is what is, I would say, is a little bit of a no-brainer of an article, but it helps to contextualize the greater economy that we have been only really vaguely referencing in for this episode. It is an important context, and again, like if we're approaching this situation where apartment supply, it used to be like the only thing you needed to track because we had steady rent and we had a relatively stable economy. There's some instability, and there is some shakeups in consumer confidence that are happening. It's worth tracking. John Burns Research and Consulting says that they conduct quarterly pulse checks of U.S. consumers to identify timely inflections in consumer sentiment, shifts in expectations, impacts of policy developments such as DOGE actions, and they conducted their most recent survey from March 7th to 16th, gathering responses from 1,271 households. I like their date. CBRE didn't do a date, but John Burns Research and Consulting provided a date. It's so useful, especially when things are moving so quickly. At least we know now when it's coming and how we can kind of factor. And specifically, we know that this came before the Liberation Day, so we can maybe expect things to get shakier, to be even shakier in terms of their confidence right now. I'll pull up some other data sources in a second here from University of Michigan and the Conference Board. But the upshot for this, right at the lead here of the John Burns article, is that more people are pessimistic than they're optimistic. The biggest increase was between Q4 2024 and Q1 2025. It went from 14% being very pessimistic to 25% of respondents now are very pessimistic. The people that are neither pessimistic or optimistic, that shrank a little. The people that are somewhat optimistic, that shrank a little. There was a little tick up, 1% by people that are very optimistic, but on the whole, the number, what we have, 46% total are somewhat or very optimistic, whereas in the previous quarter it was, let me do the math here, 39%. So that's a 7% increase in pessimism across as John Burns Research and Consulting tracks it now. I'm going to bring in, like I promised, some information from the Conference Board, which also tracks consumer confidence and also is tracking a tumble in March. We are awaiting, so this was on the 25th, and so very soon we'll have another update, and I'm expecting that it will be tumbling again when that data comes in. But around the same time, the Conference Board was also tracking a decrease in consumer confidence, and right now this consumer confidence is relatively low. It's as low as it is low as it was in 2021, the very kind of relative beginning of the pandemic. So that's going to be really interesting. So 2021 was right when people were getting used to low rates, and then they started getting excited and it spiked back up again. But expectations now are down, and they have been down for months. So there is a trend, and it's declining. And what's interesting about the Conference Board report is they look at what's happening currently, and so people's assessment of their current financial situation is a little bit improved, or at least like more stable than their expectation of the future. So current, fine, but then what about 6 months from now? No, it declined. Still, more people are optimistic than pessimistic, but there's a clear drop off in the optimism there. So can move on to the University of Michigan. So again, to summarize, John Burns Research and Consulting, declining consumer confidence. The Conference Board, declining consumer confidence. And in the University of Michigan, they are also tracking declining consumer confidence, consumer sentiment, consumer expectation, and rising inflation expectations, both in the short year ahead and in the long run. People are expecting an increase of troubles and a decrease of good things. And one of them, and they also break it down, I like this too, by politics, by your political leanings. So obviously, when a Democrat is in office, the Democrats say things are going great. I love the economy. And then right when the Republican gets in office, then they flip flop and now they hate everything. And the same thing for Republicans. But I think that it is kind of interesting that in 2024, the Republicans seemed to actually increase in their confidence a little bit more. The gap between the Republican consumer expectation and the independent consumer expectation shrank in a way that that suggests that maybe there was a nonpartisan rise in expectations, or at least, I don't know, they were less bummed out about the economy in 2024. There was some gradual progress, but again, that flip flops, and there's a difference. And if we're looking at now, we see inflation expectations. Similarly, they were higher for Republicans during a Democratic White House, and Democrats were lower. And then when the Republicans were in the White House, the inflation expectations were a lot tighter between all of them. But I think that was because this was the pre-pandemic era where it was less of a topic. Right?
Nobody talked about it.
Yeah, nobody talked about it. So that's actually good, normal, and I like to see that, the people agreeing with each other. And they break it down to even more like near term. I thought this was actually what I was looking for here. They're going month by month here and showing how the consumer expectations have gone down even among Republicans from February to April. And I would say like first of all, that's very low data points, and second of all, it's going down from like a 95% to like a 90% for Republicans, their expectations. So they're very bullish still, but the fact that they're all going down means that there is a nonpartisan part of this. It's across the board. People's expectations are going down. So there's some of this that can be explained by partisanship, some of them that can't. And I want to return back to the idea. And so the same thing can be said for inflation. Obviously, you see even in Republicans and Democrats, there is a near-term increase of year-ahead inflation expectations for both of them. So that's the summary of those two. And I want to complement this with this John Burns Research and Consulting. There is, some worries about the economy, and they also say that spending cuts from DOGE have impacted 9 out of 100. So there was like basically 10% of people were affected by DOGE cuts. And this is households. Someone in their household has been affected and either will lose or hours will be reduced. So they have been impacted in some way. Now, yeah, that's 9% total out of 100%. And that may be like relatively small compared to like the 80% that it's not applicable, and like the roughly 90% that's not, but that's still like measurable. It is a factor, like a measurable factor there. And I'd be interested to see how the tariffs shake out as a factor as well. For job security, there's decreasing job security, but I would say largely it is okay. It's not in worrying territory, but that's another. This has been decreasing throughout 2024, and more people say that it is not as great of a time to buy a house. What I wanted to kind of to bring in here also, and I reference it, I almost said it before, is like, remember the idea of the vibe session, where it was like, oh, the economy's bad or not really bad, but everyone's feeling bad. And people were pointing to, progress in inflation and low unemployment and relatively high GDP and healthy retail sales numbers, but they were still saying, well, people feel bad. Their feelings are wrong. And they called it a vibe session and they made fun of it. And is this another vibe session? And can we make fun of it?
Yeah, I mean, yes and no. I think something that puzzled a lot of people, and I think it kind of came to fruition at the end of the election, is rising inflation definitely shocks the system. I shouldn't say shocks the system, but I think has an effect on the psyche of the consumer way worse than unemployment did, and this did or does.
During the great financial crisis, the Great Recession, I think I would say that inflation bumped people out more than that.
It's a weird thing because with both the economy and then when you look at kind of the political effects, and I mean, just how they kind of intertwine, there's moments where anecdotes can be really telling, and then there's moments where anecdotes can be just useless.
Yeah.
I think what was really on people's minds and really dragging people down in the sense of consumer confidence during the height of inflation, especially in 2021 where there was still supply chain issues, is I'm going to a place to go get a sandwich and they're telling me they don't even have tomatoes.
Yeah.
And it happens all the time. Whereas like pre-inflation, it maybe happened if the delivery truck just didn't show up, and that was once in a blue moon. Or they're telling me they're running out of this, or they don't have this
You get
anymore.
constant reminders of
On top of the fact that what I was buying, 5 years ago, I mean, if you're somebody that was buying a cup of coffee every day or just buying something on a regular basis, you have that sticker shock, and you can constantly remember to yourself, hey, in 2019, this is what I was paying every day for a cup of coffee, and now I'm paying this. And on top of it, it's not like it was just limited to one product type. It was when you filled up your gas tank, gas was more expensive. When you went out to eat, it was more expensive. When you went to Home Depot to buy something to fix up part of your house or whatever, that was more expensive. There was no escaping it.
And when you were getting gas, that you would see the pictures of the president, and they'd be like, I did this. I made the prices high. And that would also remind you, right?
Right.
The sticker.
Sure. So there was really no escaping it. And I think that there either wasn't a sharp enough decline in prices, or it was just the numbness of everything's more expensive.
Yeah.
Even if one thing has gone down in price, everything is still expensive. And so I still think you saw a lot of people, I mean, even throughout last year, just saying, the economy's bad, the economy's bad.
Yeah.
And it was fascinating because, I mean, I remember Taylor Swift came here for a concert in Indianapolis, and Gamebridge was filled, and the cheapest ticket was $2,000. And it's hard to wrap your head around, like, a bunch of these people have $2,000 to just drop on a concert ticket.
Yeah.
But I'm supposed to believe this is the worst comedy you've ever had.
Yeah.
I don't
support local artists, local bands, and we won't always have to pay for Taylor Swift.
But it is a frustrating thing to see because, I mean, even then they talked about this on an episode of the Trepwire show last year at this in summer of 24 when they were doing economic data and kind of consumer confidence. 50% of people had said that last year we were at record high unemployment.
Yeah, they just didn't know. Yeah,
and it's like
that is super interesting because they're different categories, but it's just the vibes of the economy. They don't have to separate unemployment with inflation. If they see high prices, they just think, oh, economy's crazy.
So, I think some of it is, yes, I think unfortunately, and given just the makeup of our country right now, especially from a political standpoint, a lot of this information and this sentiment is going to be based off of how people feel about whatever political party is in power, especially as we continue to start viewing political parties not as political parties but as sports teams and kind of a tribal sense.
Yep.
I think where things are starting to get interesting now is with some of the Doge cuts, or at least proposed, and just some of the actions taking place by the current administration. I think there's some people that are realizing I didn't know this service or this part of the government or whatever. I didn't know this impacted me.
Yeah.
I didn't know what this meant, or I didn't realize its presence. I also think what some people thought was awful about the economy in terms of inflation, namely price of eggs.
Yeah.
It's a little bit of a sticker shock now, and this is where I hate to use anecdotes,
Yeah.
but I think it has to grate on people. You go to grocery stores around here. Sometimes, I mean, a few times I've gone to Costco, they don't even have eggs.
Yeah.
So you
Or
went
the
from
eggs that they have are like tiny and not the color you want.
no, completely out.
Yeah.
And I think some of those things are going on the American psyche of like, whoa, we had this supply chain crisis in 2021 where some things weren't available,
But also,
now they're
Addison-
just not. And also, when some people thought, all right, $4, $5, $6 is expensive. Now if things are $10 or they're just not available, and this is before a good chunk of tariffs have taken place. It's hard to ignore that.
You know, they put the president pictures on the gas prices saying, I made this. I want to put a sticker on the glass case in front of the eggs that say, please note, egg prices are the product of industry-specific conditions. It's a bird flu and stuff, right? It's not because of general inflation. It's just because of dang bird flu. We can't do what... I said it before, and it's always around Easter when people start to complain about it. Industry-specific conditions. I'll be making those. I'll be making those stickers shortly, and I'll put them on. And guess what? The grocery store will be like, "Thank you," and they will like it, and they won't see it as vandalism.
Yeah, the trend that I would really like to start is people that had the flags or stickers that said "Don't blame me, I voted for Trump."
Oh, I voted for
the last
other
vote
guy.
years. Yeah. I'd like to start making stickers or flags, but with outdated candidates.
Yeah. Oh, so, that's good.
Don't blame me. I voted for Dukakis.
Yeah. Voted for Dole. Whoever.
I voted for Dole. Yeah.
No, that's good. There is an upshot to this discussion of consumer sentiment, and especially that John Burns talks about is, if there is less money to people feel pinched, whether it's inflation, whether it is low job growth, because one of these things that consumer sentiment tracks is income expectations, and they've gone down, is first of all, they think it's a bad time to buy a home, but I'm worried about a situation in which housing demand in general goes down, because usually, almost a lot of the times, is as goes the single-family home market, so goes the rental market. Now, there's been a little bit of a bifurcation here where people can't be homeowners because they don't have the down payment money, or they're just waiting it out and they remain renters. And that is a factor, although I haven't seen the specific numbers on that. And I've been searching for 5 years and I just haven't found it. But I think that we are getting close to, if these worries are true, we could be approaching a point of time where home values go down, where as a result, and again, this is an outside chance, but it's still a possibility I think people should think about. What if the economy goes down so much that rent growth is no longer insulated? Rent growth goes down, home prices goes down, and we don't have the sunny future that we thought that we'd have by 2026. We've got another hole that we have to dig out of. Sorry, I had to get that off my chest.
I don't really see too much of a scenario where rent growth goes down outside of the markets we've already talked about, where supply and demand, there's too much supply or peak supply, where that's affected the current market. The only other way that I could see rent growth going down is just economic issues similar to COVID or similar to the great financial crisis of a lot of layoffs, incomes aren't going up or whatever. That has remained to be seen. I'm not an economist, so I'm not going to look forward and be able to say that I think massive unemployment or anything along the way is going to be coming. I think the housing situation, though, is a little different in the sense that you kind of have to think of, again, who's going to be selling an apartment complex right now, who's going to be selling their home right now.
Yeah.
Some people where the parents just want to retire and they want to get down to Florida or Arizona or wherever as fast as possible, and they don't care, or they're giving it to their kids. Or you just have a scenario where, and the explanation of it was great in a real estate book I read a long time ago, no matter what's going on, whether you're having the best economy or the worst economy, people get pregnant and have kids.
Yeah, there's
and
always
they need
going
to
to
move.
be. Yeah.
People die.
There's another
shifts
job
that
somewhere.
happen. Right. So I don't want to make a guarantee or anything, but as the saying goes with stock markets, of when everybody's panicking about the market and prices are low and there's all this concern, if you have the cash, great time to buy.
Yeah.
If you're thinking about buying a house right now, might not be the worst time, right? I mean, if general people are concerned, then, and you can make it work, I think it's worth something looking into. But I think something else going on right now is, if we go back to COVID, it's remarkable how much we've talked about COVID this episode and reliving 5 years ago. With COVID, there was huge sense of panic and frustration of, at a minimum, we're taking this 2 weeks at a time. Hopefully in 2 weeks from now, the cases go down.
Yeah.
Hopefully in 2 weeks from now, hospitalizations or whatever go down, and maybe we can open up the restaurant again. Maybe we can do outdoor dining. Maybe we can do, we can go travel or whatever it was at that time. I think there's a little bit of frustration. I don't want to say a little bit. There's definitely a frustration going on right now of everything's wait and see.
Yeah.
Tariffs might be happening or might not be happening, such that at where I work, we might go ahead with the project. We might not go ahead with the project. There might be this, there might be that. Then they leave work. Well, I don't know if we want to move into a home because if it costs money to do, renovate the kitchen or whatever, I don't know how much a dishwasher is going to cost. I don't know how much this is going to happen.
Or switch to if you can't pre-order the new Nintendo. Can't even do that.
Sure. So there's too much of that. There's too much I don't know. And based on what we've read in this in these articles about how people's perceptions of the economy, political parties or whatever.
Oh yeah,
I tend to think there's a little bit of, like, even when they go to job security, 2022 in 2021 even, there's a sense of like, holy crap, not only could I be secure in my job, but the job market right now, I could leave and make more.
Yeah.
And now there's this weird thing of like, I might be fine with my job, but if this project doesn't go, I don't know. Also, I don't know if I can find another job.
Yeah.
There's no layoffs going on like the great financial crisis.
Yeah.
But I think there's just a little bit of like, everything is chaotic right now.
Yeah.
Everybody that I'm talking to has no idea. And also, part of the shock to the economy right now is tariffs. The people putting on the tariffs don't know if they're going to do them or not.
And I haven't even talked about interest rates. And I was going to note that for the past couple of weeks is 2 weeks ago we talked about
Jerome Powell doesn't know what's going to happen.
Jerome Powell doesn't know if he has a job next week. No, I think he's okay, right?
Anytime I see him, I'm sure he's like, you know what, I could just be done.
Yeah, well, and he's like, it's like, I wonder if he does have that attitude of like, well, if I'm going to be fired anyways, then I'm going to walk around like I own the place. Like if you give in your notice already, your 2 week notice, and you're like, interest rate hikes, whatever.
He's taking
you can't touch me.
3-hour lunches.
Yeah. He's quiet quitting.
Yeah.
No, I wanted to talk about this. So interest rates, and particularly here, let's edit this graph to make it a little more grand. This is a month. I've got in blue here is the 10-year treasury, and I made the line a little smoother, so I have like monthly data. Let me edit this and format it so that it is not monthly and it is daily for the 10-year. Okay, so it's a little squiggly, but we get more info here. You see how in this, so my point is the 10-year treasury is still high. And 2 weeks ago, we talked about the 10-year treasury. That was weird that there's economic volatility, but usually what happens when things are volatile, people buy bonds because, well, that's less risky. And so that makes the 10-year treasury yields go down. So it's a nice little release valve. It makes sense. I understood it. I was confused 2 weeks ago. And then like immediately after we recorded, I started reading articles about how, no, this is why. And it made sense. I just wish I read them earlier. But the reason why was essentially, and I think you can get like into the geopolitics of it, but essentially people bought less bonds because they didn't see them as safe anymore. Before they were this safety valve, and now they're not a safety valve anymore, slightly not a safety valve, or not as much as they used to be. So that's why yields are staying up, is because they see the economy is risky, but they certainly don't see, but they also see like bonds as a little bit risky too. Like maybe the U.S. won't pay him back. Like I think that's a little far-fetched. I think we can treat them as safe, but this is what's happening, and there's no getting around it.
Yeah,
and so that circling back to investor sentiment and consumer sentiment, I think that having an elevated period of high interest rates has got to be a big drag on sentiment. It's not nice. It doesn't make me feel optimistic about stuff when I know that either whether it's a multifamily project or a new home, I've got to pay all this money just for the cost of the loan. Whereas before, didn't have to do that. I don't think people are used to it yet.
I think Well, right. I think it's a combination of that. There's a lot of people in real estate that were in the 70s or 80s that will happily tell people my age, think about how high interest rates were when we were buying homes or
Yeah,
whatever.
but the whole system was set up differently than that. We have to deal with this change, and that's what. Yeah, and it seems like expectations are taking a long time to get adjusted here.
I shouldn't say I think. If you look at the run in interest rates, it's centered around the time of the Russia-Ukraine war. There's massive supply chain issues going on at the United States and quite frankly across the world at that point. You had the Suez Canal issue that kind of halted global trade for a little bit. On top of the fact that you're still trying to get out of a pandemic and you're trying to get back to an America, a normal America, if that exists, but also just kind of a normal world. You kind of put that 5-year stretch together, you start to almost feel like, okay, the people that we thought had things under control don't have anything or don't have it under control, not sure what's going on.
Maybe.
And
the bond buyer thinks that, like, oh, this has been shaky. I'm a little.
I can't
buy less.
I can't speak to bonds. I'm truly speaking to what you had said of just there's fatigue and people are going on because it's like, well, interest rates will go up, but this stuff should such and such happens, and things are going to go down.
Yeah,
they haven't.
Yeah,
and at least in America, one of the things that the voters love doing is just constantly hitting the ejector seat on whoever's in power.
Yeah,
well, we've done that how many times? Interest rates are still high. Inflation's still up.
That's why Powell. Let's eject Powell and get the rate cutter in there.
I think it's generally associated with a sense of things are out of control.
I will say that
bunch of people that we thought should have been handling things or things we never thought would happen are now happening. Yeah.
I think that the market reacted negatively to the idea that Powell would be fired, and I think that that's probably some validity in if the Fed chair was always under the hot seat and was subject to the political whims of whatever the popular opinion is, there would be little stability. It'd be even more volatile. So I think that's probably not likely that he'll be ousted, but we'll see what happens when his term is up. And I also think that there's a whole board for the Federal Reserve, so there's maybe more stability inherent in that than just one person that can move things.
The current administration has shown no problem firing people. I think if they want to fire Jerome Powell, they will fire Jerome Powell.
Finally, he's boring. Let's bring in something, put on a little show. No, that's I think that there's a really good logic there, and that's why I think markets take them seriously. But yeah, these are just a sample of the things that are moving very fast and have a real serious implications for the multifamily market, housing, and the economy. We are tracking all of these long-term and short-term trends shaping the apartment market, consumer sentiment, investor sentiment, everything that impacts and everything that is valuable to know now and long-term in the future. For multifamily investors. We'll keep track of it every week on the Gray Report. And if you want to follow along on our newsletter, go to www.graycapitalllc.com/newsletter. You will get the best multifamily newsletter in the world. And you'll get it every week, maybe even twice a week. It's free. It's great. It's wonderful. See you next week.